start. I'm reading hire purchase. Listen, before we learn technically about hire purchase accounting, first let us learn about basic terms that are used in hire purchase. Pay attention. In case of hire purchase, the first one is cash price. You have to understand what is a cash price. Cash price means if you pay the full money and purchase an asset, what will be the price? That is called as what? Cash price. For example, I am purchasing a machinery. If I pay 5 lakhs, immediately they will give the machine, I will become the owner of the machine. Okay, in case of normal purchase, what is the normal price payable? 5 lakhs. That is called as which price? Cash price. Cash price is payable for immediate settlements. Okay, let us assume I am planning to pay this in 4 years payment. I am going to pay it in 4 installments. Maybe 1,25,000 like that in 4 installments. Or I will make some down payment. What is down payment? Immediately on purchase, I am planning to settle 1 lakh plus installments are paid. Let us assume installments are collected like this. 4 installments into 1,50,000 you have to pay. Okay, down payment how much you paid? 1 lakh plus 4 installments of 1,50,000 means how much you are paying? 6 lakhs. So totally how much you are paying in the period of 4 years? 1 lakh already paid down payment plus 6 lakhs. What is the total you are paying? 7 lakhs. This is called as hire purchase price. What is hire purchase price? The total price paid including interest. Including what? Interest. What is the difference between this 5 lakhs and 7 lakhs? Why are you paying more? Interest. Since you are not paying on day one, this extra amount we call it as what? Interest. So cash price is nothing but price payable at the time of what? Normal purchase and sale. Hire purchase price, there are 2 methods of doing or understanding hire purchase price. Cash price plus interest, or you can say down payment plus total of installments including interest. Clear? How to get this hire purchase price? Cash price, if interest rate is given, add the interest, you will get what? Okay, hire purchase price, or down payment plus what? Total of all the installments paid will give us what? Hire purchase price. Now listen, what is the cash price in this example I told you? 5 lakhs. What is the hire purchase price in this example? 7 lakhs. What is the cost of asset for you? Is it 5 lakhs cost of the asset or 7 lakhs cost of the asset? 5 lakhs is the real cost of the asset. That extra 2 lakhs you are paying because of your financial arrangement. That interest will be taken to P&L account. Interest will be taken to which account? P&L account as an expense. This 5 lakhs will be recognized as what? Asset in the balance sheet. Okay, that extra 2 lakhs you are paying, that is called as what? Interest. That extra 2 lakhs will be recognized as interest in which account? P&L account. Expense in P&L account. My question is, will you recognize this 2 lakhs of interest in first year or second year or third year or fourth year? In which year? This 2 lakhs, will it be charged for the first year or second year or third year or fourth year? For all the 4 years. For all the 4 years. And my question is, whether this 2 lakhs divided by 4, will you charge 50,000 per annum? Whether interest will be equal, 50,000 per annum? No. In the initial year, interest will be low, high. In the initial year, interest will be what? High. Because in the initial year, the principal loan amount will be high. As you start repaying, the principal loan amount will be what? Less. So it will not be like a fixed amount like 2 lakh divided by 4. No. All these things we will be learning how to charge, which amount to charge in which account, P&L account, how much to recognize, all those things we will be learning in this particular process. But as of now, what you have understood? Cash price means normal purchase price or selling price. Hire purchase price will include interest also. Cash price plus what? Interest also will be included in what? Hire purchase price. Remember, there are 2 systems that are normally used. Hire purchase system and installment system. But in our normal day-to-day life, both are mixed and used. But legally they are different. Hire purchase means only on the completion of all the amount due, you become the owner of the asset. For example, you paid first installment, second installment, third installment, fourth installment alone you are not able to pay. In case of hire purchase, the vendor has the right to repossess the asset. Sir, only one installment I have not paid. No, you are just a hirer. Till the payment of all the installment, you are becoming a hirer. Only when you complete all the installments, then you become what? Owner. Okay, sir, I paid 3 installment. Down payment I paid. Plus installment 1, 2, 3 I paid. 4th installment only I have not paid. Asset will be taken back by the financier, hire vendor. Okay. Will you get any money back? I paid down payment plus 3 installments. Will you get back any money? No, money paid is, that's all. Any amount will be forfeited. Amount will be what? Forfeited. Asset will be taken back. Asset will be taken back. But in case of installment system, legally, in case of installment system, on signing agreement itself, we become the owner of the asset. I make a down payment, or without down payment, I take over the asset. I become which one? Owner of the asset. Okay, what about the default in payment and installment? There also asset will be taken over, but ownership is passed when on day one itself. That's why practically they don't sign any installment agreement. Practically they sign only which agreement? Hire purchase agreements, because it is risky. Okay, without asking, without collecting payment, if they give the ownership, what he will do? He will sell the asset to someone else. He will sell the asset to what? Someone else, where financier will lose money. There is a chance of losing money. Okay, so though in our world we call it as which one? Installment system. It is actually what? Hire purchase only. Always they will sign which agreement? HP agreement. Especially it is very famous in case of two-wheelers. While registering, when you purchase under this hire purchase system, they will put a hire purchase agreement. They will get the signature and all. In RTO office also, your name will be there, vehicle detail will be there, then HP agreement will be there. It is hypothecated to this particular thing, or it is under hire purchase agreement for this particular thing, like that it will be there. Can you sell the vehicle? For example, after 1 or 2 years, can you sell the vehicle? Let's assume you completed the payment of all the 4 installments. Can you sell the vehicle? Even now you cannot sell the vehicle. You have to get the NOC. NOC means from the financier you should get what? NOC. Only then release will be done. RTO will release and cancel the HP, and you become the absolute owner. Only then you can what? Sell the vehicle kind of a thing. So practically for all commercial purpose, they use only which one? Hire purchase. Start. Hire purchase. Okay, can hire purchase purchased assets be shown as an asset or not? We will see. There is a concept we learned already. We will just apply the concept. Okay, start. Hire purchase. It is a system of deferral payment. It is a system of deferral payment. It's a system of deferral payment in which hire purchaser becomes owner of the asset. Hire purchaser becomes owner of the asset on the payment of all installments. On the payment of all installments / amount due. On the payment of all installments / what? Amount due. Full stop. Separate line. Basic terms. Basic terms. Start. Cash price. Cash price. Nothing but normal, you can call it as selling price or purchase price. Cash price is nothing but normal selling price or purchase price. This is the cost of the asset. This is the cost of the asset to the buyer. Or you will record the asset at this cost. Cash price. Otherwise, you can note this is without interest. This will not include interest. Normal purchase price or selling price, it is the cost of the asset. It is including interest or without interest? Without interest. Next. Hire purchase price. Hire purchase price, there are 2 methods of working. Cash price plus interest, or you can say down payment plus installments including interest. Value of installments including what? Interest. Hire purchase price is equal to cash price plus interest, or down payment plus installments including interest. Now interest should be taken as an expense. Interest should be taken as an expense. See, in case of consumer goods, only monthly installments will come, like TV, refrigerators, okay, or two-wheelers or cars. Which installment will come? Monthly installments will come, because monthly you get salary. From that salary, you pay that installment. In case of industrial goods, you are purchasing a plant and machinery, you are purchasing a truck, or you are purchasing certain heavy cost items, high cost items. Is it possible for a company to pay monthly? You are a business person, will you get monthly cash inflow? Like a salary income, will you get monthly regular cash inflow for business? No. Normally in case of industrial goods, installment will be like once in 6 months or once in a year. Once in a year. Okay, installments will be normally once in a year, it will be given on the problem. For example, you will make down payment today and purchase the asset. When the next installment will come? At the end of the year. At the end of the year, the installment will come. Okay, start. The interest is recognized. The interest is recognized. Interest is recognized as an expense. Interest is recognized as an expense on accrual basis. Interest is recognized as an expense on accrual basis. In the books of the purchaser, it will be like an expense. On what basis? Accrual basis. On accrual basis. Full stop. It is calculated. It is calculated on the loan amount outstanding. It is calculated on the loan amount outstanding at the beginning of each year. It is calculated on the loan amount outstanding at the beginning of each year or each period. Okay, at the beginning of each year or what? If it is once in 6 months, each period like that you will count. At the beginning of each period. To make this understand this concept, let me give you a small example. Please listen to it. We can solve it later or take it up later. Listen. Let's assume cash price is 2,50,000. Cash price is how much? 2,50,000. Listen. You are agreeing to make a down payment of 50,000. What is the balance? This 2 lakhs you are agreeing to settle in 4 installments. 2 lakhs divided by 4, how much it will be? 50,000 per annum you will pay, plus interest you will pay. Plus interest you agreed at the rate of 10%. Interest agreed is 10%. Listen, now the workings will be. For example, what is the cash price? 2,50,000. What is the down payment you are making? 50,000. Down payment is made on day 1. Down payment is made on day 1. Will it include interest? No. It is also considered as one installment. What is the amount? 50,000. What is the balance outstanding? 2 lakhs. Now in the first year end, how much you will pay? Principal amount 50,000. What will be the interest amount? 5,000? No. Think over. What is the loan outstanding? 20,000. 2 lakhs into 10%. What will be the interest component? 20,000 will be the interest component. So how much you have to pay? 50,000 plus 20,000. Installment you have to pay is 70,000. Now what is the balance outstanding? 1,50,000. So second year, what will you pay? 50,000. Now interest will be on this loan outstanding 10%. Because second year, throughout the year, what is the loan outstanding? 1,15,000 to 10%, how much? 15,000. How much you will be paying? 65,000. Balance 1 lakh. Third year, you will pay how much? 50,000. On this 10% will be? Okay, 10,000 you will pay. Totally how much you have to pay? 60,000 you have got to pay. So interest will keep on coming down. Then next year or last year, fourth year is the last year. What is the balance outstanding? 50,000. Fourth installment will be this 50,000. 10% on this 5,000. Totally how much you will be paying? 55,000 you will be paying, where loan will become 0. If you look at what is the total interest you have paid? 20 plus 15 plus 10 plus 5. What is the total interest? 50,000 is the total interest paid. If you add up, it will give you higher purchase price. Installments 50,000 plus 70,000 plus 65,000 plus 60,000. Add up all these things, you will get 3 lakhs. You will get. That is what we learned. What is higher purchase price? Cash price plus interest. What is the cash price of the asset in this example? 2,50,000 is the cash price of the asset plus what is the total interest? 50,000. It will give us what? Higher purchase price. Otherwise, interest will not be fixed. Interest will come down each year because the loan amount outstanding is the same. It gradually comes down. Interest also will come down each year. So this amount will be recognized in P&L account. First year, what is interest you are paying? 20,000 for you, it is an expense. For the receiver, it is going to be an income. Second year, what is interest accrued? 15,000. I will transfer this to P&L account. Third year, 10,000. Fourth year, how much? 5,000. These interests will be charged to which account? P&L account. Now, what is the real cost of the asset? What is the cost of the asset? This 2,50,000 is what? The real cost of the asset. That will be recorded in books. That will be recorded in books. Sir, can you record this in books? I'll come to that concept later. Already we learned the concept. We'll apply that later. Now take up this example. Take up. Cash price 2,50,000. Start. Cash price 2,50,000. Cash price 2,50,000. Down payment 20%. Down payment 20%. That will be 50,000. Down payment 20%. Balance in 4 equal installments. 4 installments, that's better. 4 installments. 4 installments together with interest 10% per annum. Balance with 4 installments together with interest 10% per annum. We'll take up the workings. So columns will be like cash price outstanding. You can have the column like cash price outstanding, interest, installments. Cash price outstanding, interest and what? Installments. You can have the title. Any doubt in the working? First year, not 2,50,000 outstanding. 50,000 we settled immediately. So 2 lakhs into 15%, 10%, 20,000. Second year 15,000. Third year 10,000. Last year 5,000 like that. Interest is 10% per annum. How to do accounting? We learn through a separate problem. How to do accounting for hire purchase? We learn through a separate question. So now let us learn about different types of interest calculation. It's a basic problem to understand how to calculate interest. I request you to go through question number 1 in your material. It will be in the similar style. I request you to go to question number 1 after this. There is a mistake in the problem. I request you to change it. What is the cash price? Take it as 6 lakhs, please. That's a typing error. Cash price 6 lakhs. Down payment 1 lakh 50,000. Remaining in 3 installments of 1 lakh 50,000 plus interest what? 10% per annum. They ask you to work out higher purchase price and what? Interest. Try. Cash price, take it as 6 lakhs. Down payment 1 lakh 50,000. Remaining in 3 equal installments. Calculate higher purchase price and interest. No accounting is asked. Only the higher purchase price and what? Interest is asked. What is the cash price? 6 lakhs. Working is same like last problem. Down payment, how much is made? This 4 lakh 50 we are paying in 3 installments. 1 lakh 50,000 each. First installment, second and third, like that. So interest for the first year will be on this how much percentage? 10%, 45,000. After paying the balance, what is the balance? That into 10%. So what is installment payable? Down payment is considered as one installment, 1 lakh 50,000, 1 lakh 95,000, 1 lakh 80,000, and if you add up, you will get a higher purchase price. 90,000 is the total interest. This is the higher purchase price. Done? Next, which question? Second question you can try. That is in the same style, you can try it at home. Second problem you can try it at home. It is in the same style it is given. Cash price 2 lakhs, down payment 50,000, remaining in how many equal installments? 3 installments with 12% per annum. Nothing new to learn in this. It is just a repetition of what we have learned in the example and first question. Go to the third question. We'll first calculate interest, hire purchase price and all. Okay. Then accounts we'll learn. Journal entries we have not done so far. Through this problem, let us learn accounting. X Limited purchased from machinery from Y Limited actually. Cash price 2,50,000. Down payment 1 lakh. Annual installments are 50,000 for what? 4 years. They are providing 10% depreciation SLM. Show necessary accounts in the books of both the companies they have asked for. What is missing in this problem? Last two problems we were given interest rate 10%, 15%. Interest rate was available. But here, what is missing? Interest rate is missing. Interest rate is missing. Interest rate is missing. What is the cash price? 2,50,000. Down payment 1 lakh. Plus installments are what? 50,000 into how many years? 4 years. 50,000 into 4 years. Just add up installment and down payment. Let us see. Start. Computation of amount paid. Computation of amount paid. What is the down payment made? 1 lakh. Plus, how many installments? 4 installments of 50,000 each is given, which means 2 lakhs. Total amount paid is 3 lakhs. But what is the cash price given in the problem? 2,50,000 is given in the problem. So, whatever they have given is hire purchase price. Whatever is given is what? Hire purchase price. What is the total amount? Difference. 3 lakhs, 2,50,000. What is the difference? This 50,000 is interest for how many years? For 4 years. Interest for not 1 year, interest for 4 years. Now to share it. 50,000 divided by 4 will you do? No, we had seen in the last two questions, interest is not equal. Interest in the first year it will be more. Second year, third year it will be keeping on reducing. Look at the first example we have done. Here, what is the interest? 20,000, 15,000, 10,000, 5,000. Look at the ratio. 20,000, 15,000, 10,000, 5,000. What is the ratio? 4 is to 3 is to 2 is to 1 ratio. Or look at the last problem that we have done. Look at the interest. 45,000, 30,000, 15,000. Okay, interest is reducing. 3 is to 2 is to 1 because it is a 3 years problem. Now, it is how many years? 4 years. You can split in which ratio? 4 is to 3 is to 2 is to 1 ratio. That means 4 by 10, 3 by 10, 2 by 10 what? 1 by 10. Now the 10 comes, add up. 4 plus 3 plus 2 plus 1, 10. So 4 by 10 for first year. 50,000 into 4 by 10, 20,000 for first year, 15,000 for second year, 10,000 for third year and 5,000 for what? Last year. Like that you can work out. Listen, this is a shortcut method. You can apply a logical method also. What is the hire purchase price? 3 lakhs, how much we settled immediately? Down payment we settled immediately. 1 lakh. What is the balance? 2 lakhs will be outstanding for first year. Then, in that we would have paid 50,000. So, how much will be outstanding for second year? Out of 2 lakhs, 50,000 installment is paid. So, how much will be outstanding for second year? 1,50,000. How much will be outstanding for third year? 1 lakh. And fourth year, how much will be outstanding? 50,000 will be outstanding for fourth year. So, if we make out the ratio will be in which ratio? 4 is to 3 is to 2 is to 1 ratio, like that it will be. But again, it is only a logical thinking that is for that we have done this. But you can just work out in reverse ratio. If the interest, if the period is 5 years, what you can do? 5 is to 4 is to 3 is to 2 is to 1 ratio. So, take up this. Please remember, this installment 50,000. This installment 50,000 includes what? Interest. Includes interest. So, totally 3 lakhs. Cash price is 2 lakh 50. This 50,000 is interest for how many years? 4 years. We write it in the reverse order. For first year, second year and third year. Of course, fourth year also. This is not required. What is the next one we have to learn? Accounting. Here, what is missing? Rate of interest is not specified in the problem. Start. Accounting entries or journal entries. I request you to split your notebook into two columns. First column for hire purchaser, the buyer. Second column for hire vendor. First column for hire purchaser, second column for hire vendor. Listen to this. At the end, I will give you time to copy. Listen. For hire purchase or hire sales. For hire purchase or hire sales. Who's getting the asset? Purchaser is getting the asset. Ownership is not transferred, but only what? Possession is transferred. He has asked one question, sir. Without ownership, how can he record the asset? In accountancy, we learned something called as substance over form. What do you mean by substance? Truth should be presented. Okay, then what? Legal formality. Legally, you are not the owner. But for what purpose you are making the payment? For what purpose you are making the payment? Towards the ownership, towards the cost of the asset only. So don't see the legal substance while doing what? Legal thing while doing accounting. See the substance. Substance is we are paying to get the ownership of the asset. Or we are going to become what? Owner of the asset. It can be recorded. It can be recorded. At which value it will be recorded? Asset minus depreciation. Asset minus depreciation. Okay. Sir, what about the amount payable? It will be shown in liability side. Whatever is amount not paid, it will be shown in liability side. Asset value will be recorded in what? Asset side. When they attach the asset, it will be closed. Okay. Start. Okay. Wait. Okay. What is the first entry we have to pass? We are purchasing the asset. We are purchasing the asset. Listen. Asset account data. Asset account data. Are we paying immediately? No, to hire vendor account. Asset account data to hire vendor account. He is selling that. What is the entry he will pass? Hire purchaser account data are to not assets. For him, it is a normal stock sales. It will be called as hire sales. To distinguish normal sales and this hire purchase sales, he will record it as what? To hire sales. Next listen. For down payment. For down payment. Who's making the down payment? Hire purchaser is making the down payment. What entry he will pass? Debit the receiver. Hire vendor account data to bank. Hire vendor account data to bank account. Here it will be collection. Bank account data to hire purchaser account. Bank account data to hire purchaser account. Okay, payment received. Next. Remember this these two entries will come only once. These two entries will come only once on day one. Transfer of asset and down payment is collected. Hereafter, whatever we pass will get repeated each year. Okay, what is the next one? For interest. Interest, will you pay one time or depending upon the term? 4 years, 5 years, depending upon the term. For interest, for whom it is an expense, for whom it is an income. Purchase it as an expense. So interest account debtor to hire vendor account. As of now, we will transfer the interest to hire vendor account. We will pay it separately. Then for him, it is a receipt. Hire purchaser account debtor to interest account. It is an income for him. Credit the income. Thereafter, fourth entry will be for installment. Installment will include interest. Installment will include what? Interest. What is the entry you will pass? We are making the payment. Hire purchaser is making the payment. Debit the receiver. Hire vendor account debtor to bank. Hire vendor account debtor to bank. Debit the receiver. Credit what goes out. Now, what is the difference between down payment and this one? Entry is same. Entry is what? Same, but down payment will come only once. This installment payment will come every year. Here he is collecting the money. What is entry he'll pass? Bank account debtor to hire purchaser. Bank account debtor to hire purchaser. Next, fifth one. For depreciation. For depreciation, who can claim depreciation? Who is having the asset? Hire purchaser. Who is using the asset? Hire purchaser. For hire purchaser only, it is like a fixed asset. For the vendor, it is a stock in trade. So depreciation will be in the books of hire purchaser. We know the entry for depreciation already. What is the entry? Depreciation account debtor to asset account. The asset can be machinery or plant or furniture or car or truck, anything. For the other party, no entry will come. No entry will come. Next, listen. Transfer of interest and depreciation. Interest and depreciation. For the purchaser, it is an expense. For the purchaser, it is an expense. What is entry you will pass? P&L account debtor to interest to what? Depreciation. For him, interest only will be transferred to which account? Interest account debtor to which account? P&L account. Interest account debtor to P&L account. Once again, repeat from the beginning. What is the first one? What is the first one? Purchase. What is the entry for purchase? Asset account debtor to hire vendor account. He is selling. What is the entry? Hire purchaser account debtor to sales. Next. For down payment, what is the entry for down payment? Hire vendor account debtor to bank account. Then bank to hire purchaser. Then interest. Every year we will output interest account debtor to hire vendor account. Next. Hire purchaser account debtor to interest account. Next. For installment, hire vendor account debtor to bank, then bank account debtor to hire purchaser account. Then depreciation can be claimed only by hire purchaser. What is the entry? Depreciation to asset. Then transfer depreciation and interest to P&L account. The other party will transfer only what? Interest to P&L account. Take it up. Yeah, let us do accounting for the last problem. Last problem. What was the down payment? 1 lakh. Down payment is 1 lakh plus 4 installments of 50,000 each. So totally hire purchase price is 3 lakhs. Cash price is what? 2 lakh 50,000. 50,000 is interest for 4 years. We split 20, 15, 10, 5 like that we have split. Listen. Let us do accounting. Listen. In the books of first hire purchaser. In the books of hire purchaser. Who is hire purchaser? Both of the problem. In the books of X Limited. In the books of X Limited, listen. Purchaser will maintain. Listen, all the accounts will not be asked in the exam. With respect to hire purchase, what are the ledger he will maintain? He is purchasing a machinery. He will maintain which account? Machinery account. He will maintain machinery account for 3 years. Then he will maintain hire vendor account. Who is hire vendor? Y Limited account. So what about depreciation account, P&L account and all? That and all is not required. With respect to hire purchase transaction, what are the extra accounts you have to maintain? This machinery account and what? Y Limited account. How to process? Very simple. What is the first entry we pass? Look at the specimen entry we learned. Asset account data to hire vendor. How this will be posted? Machinery account data to Y Limited. Machinery account data to Y Limited. What is the cash price? Cash price 2,50,000. 2,50,000. How this will come in Y Limited account? By machinery. By machinery, how much? 2,50,000. 2,50,000. Any doubt in it? Asset account data to hire vendor, and the hire vendor book it will come as what? By machinery. Listen, pay attention. The machinery account, every year depreciation will come. What is the depreciation rate given in the problem? 10% SLN. 10% SLN. So first year 25,000. By balance carry down will be 2,25,000. These things we learned in depreciation chapter. To balance brought down. How much? 2,25,000. Again, by depreciation 25,000. By balance carry down 2 lakhs. Next, to balance brought down 2 lakhs. By depreciation 3 years if you show sufficient, because transactions are only for 3 years. 1,75,000. Otherwise 4 years. Okay. 1 more year you can continue. Listen. This 2,25,000, 2 lakhs and 1,75,000 are what? Value of assets at the end of each year. At the end of each year, after what? Depreciation. Now coming to this account, first we make down payment. What is the entry for down payment? We learn hire vendor account data to bank. Hire vendor account data to bank account. So Y Limited account data to bank account. To bank account, how much we are making? Down payment 1 lakh. 1 lakh. Thereafter, at the end of the year, interest account data to hire vendor account. Interest account data to hire vendor account. How this will be posted? By interest account. By interest account. How much is interest payable? First year. Between the working. First year interest is 20,000. Then Y Limited account data to bank account. What is the first installment paid? What is installment payable? 50,000. Thereafter it will be closed. To balance carry down. Should you add interest? Should you add interest? This 3 lakhs includes interest. Hire purchase price includes what? Interest. So automatically include interest. Interest is included in which one? Hire purchase price. So it is automatically included in what? Installment. That's why I said installment include what? Interest. We'll check, cross check also, because transaction should close in which year? 4th year. We'll see what is the balance carried down. 1,20,000. 1,20,000 to balance carried down. It will come as by balance brought down. 1,20,000. Second year also by interest. What is the second year interest? 15,000. Then make the payment. To bank at the end of the second year, how much you will be making? 50,000. To balance carry down. To balance carry down, 1,35,000 minus 50, 85,000. Next year, by balance brought down. Third year, by balance brought down how much? 85,000. By interest, 10,000. Then third year, how much you are making? To bank, how much is paid? 50,000 is paid. To balance carry down, how much? 45,000. Last year, by balance brought down, how much? 45,000. By interest, how much? 5,000. Last year, we are settling and closing the account. To bank, how much we settled last year? 50,000 is settled and accounts is closed. So, at the end of the fourth year, what will be the asset value? This, you have to provide depreciation, that will be the asset value. What is the liability at the end of fourth year? 0. Fourth year it is settled. So this is in the books of which party? X Limited. This is in the books of what? X Limited. Once again I repeat. Where do we start? First entry. What is the first entry? Asset account data to hire vendor. 2,50,000 recorded. What is the next one? Depreciation we charge every year. 25,000, 25,000 because it is SLM and closed. Asset account is closed like that. Then first year alone, two payments will come. One is which payment? Down payment. Second is installment. Of course, interest will be credited every year. Okay, interest will be added and installment is paid. Last year you can find what is closed. Last year what is closed? Liability is closed. And asset will have a carried over balance. Asset is with you. You become the owner of the asset. Asset will be with you. Listen. This is in the books of purchaser. In the books of, you can mark it as hire purchaser. You can mark it as hire purchaser. Then, in the books of hire vendor, what will happen? Please pay attention. Simple to learn. In the books of hire vendor, what will happen? Will he maintain asset account? Hire vendor, it is a stock in trade. He will not maintain asset account. So he will maintain what? Hire vendor will maintain hire purchaser account. Hire purchaser account. It will be a mirror image of this account. This account, it will be a reverse one. It will be a reverse one. Okay, because he is going to pay, the other party is going to what? Collect. It is simple to do. Just listen to it. Who's the party? Who's the other party? Hire vendor. What is the name of the hire vendor? Hire vendor Y Limited. In Y Limited book, you will maintain what? X Limited account. You will maintain X Limited account. What is the first entry we passed? Just go through the entry we learned. Hire purchaser account data to hire sales. How this will be posted? To hire sales. 2,50,000. Then by bank, we collect down payment. What is the by bank down payment? What is the down payment? 1 lakh. We collected down payment. Then to interest for the first year, 20,000. By bank, we collect the first installment. What is the by bank first installment? 50,000. Then by balance carry down. By balance carry down will be 1,20,000. Like this, it will continue. To balance brought down is 1,20,000. To interest for the second year is 15,000. Then by bank how much? 50,000 we collect. Balance carry down. Balance carry down how much? 85,000. Next year, to balance brought down how much? 85,000. To interest 10,000. By bank, how much is collected? How much is collected? 50,000. By balance carry down 45,000. 45,000. Next year, to balance brought down 45,000. To interest 5,000. Collect the same and close. By bank, how much we collect? 50,000. Accounts are closed in 5th year. If you look at, it will be just a mirror image, just a reverse image, right? Clear? By mission, by interest. Then every year we charge interest and pay the money. Here it is just a reverse one. To hire sales, Buy bank. This is a down payment. First one is what? Down payment. Next one is what? Installment. See, in the books of hire under, I'm going to collect the money. Interest is an income for me. It will just show what? A reverse image. Whether asset account will be maintained by hire purchaser? Asset account will be maintained by hire purchaser. Will it be maintained by hire vendor? No. That's all. Take up this. Are you getting? In the books of hire purchaser. In the books of hire purchaser. Asset, I request you to continue for one more year. To balance brought down 1,75,000. Provide depreciation and close. In the exam, you must write properly. Okay, don't put by DPN, by BAL, CD, and all. I request you to please write in full form and write neatly also. Yeah, please copy this also. Okay, this is in the books of what? Please note it is in the books of which one? Iron Vendor, Y Limited. Please take up this. Next, we'll go on to
question number 4. Please go question number 4. The data is totally different. A Limited purchased a machinery from B Limited. What is the down payment? 10,000. Yes, 10,000. Installments including interest is given. Installments including interest is 25,000, 13,000, 12,000 and what? 11,000 for 1 to 4 years. Interest rate is 10%. Interest rate is what? 10%. What is missing in the problem? Cash price is missing in the problem. Okay. We are given installments including interest 25,000, 13,000, 12,000 and 11,000. Interest rate is mentioned in the problem 10%. But what is missing is cash price. What to do? We know installment plus interest will be what? I mean, cash price plus interest will be higher purchase price. We know interest will not be a uniform amount. Interest will not be a uniform amount. Think over. Just read through the problem once again. And please make one more note. Depreciation, please make a note. This WDV that is missing. Depreciation 20% WDV. Take this additional information. Depreciation 20% WDV. Yeah, paying attention. When cash price outstanding is 100, when cash price outstanding is 100, interest will be how much? 10%. What is the total? 110 will be like installment. Clear? When 100 rupees is cash price is outstanding, 10% will be added and total amount will be what? 110 like that. Applying this principle, we can work out. We can cross check also. Pay attention, then you can take it up. Let us work. We cannot do it from first year. We cannot do it from what? First year, we have to go reverse from fourth year. Fourth year, please pay attention. What is installment paid? What is installment paid? Fourth year, last year, 11,000. Interest would have been 11,000 into 10 by 110. Why 110? Because installment includes what? Interest. So 11,000 into 10 by 110, how much? 1,000. Then cash price paid would have been 10,000. You can cross check also. Last year, what would have been outstanding? Last year, what would have been outstanding? This 10,000 would have been outstanding. Interest would be 10% on that. 10,000 into 10% will be 1,000. 10,000 plus 1,000, what is the amount paid? 11,000. Like that, we can cross check. Listen. Please listen. There is a logical thinking required for third year. Third year, what is the amount paid? 12,000. 12,000. This 10,000 also would have been outstanding. This 10,000 also would have been outstanding. So 10,000 plus now how much you are paying? 12,000. Both into 10 by 110. 2,000. So 12,000 minus 2,000, what is the amount? 10,000. 12,000 minus 2,000, 10,000. 12,000 is installment paid minus interest is what? What is interest? 2,000 means what is the cash price paid? 10,000. Now listen, we are in which year? Third year. Listen, third year beginning, what would have been outstanding? Both the amounts would have been outstanding. This is fourth. This last 10,000 is paid in fourth year. This is paid in third year end. So at the beginning of the third year, how much would have been outstanding? Both amount would have been outstanding. How much? 20,000 would have been outstanding. 20,000 into 10%. 20,000 into 10%. How much? 2,000 interest will come. I'll come back to the verification once more. Now we are moving to which year? Second year. Look at the installment paid. How much? How much? 13,000. At that time, both these amounts would have been outstanding. 10,000 plus 10,000 now. 13,000 into 10 by 110. So 33,000 into 10 by 110, 3,000. So 13 minus 3, 10,000. Next. First year, what is installment paid? In the first year, all these amounts would have been outstanding. 10,000 plus 10,000 plus 10,000. Now how much we are paying? 25,000 into 10 by 110. 5,000. 25,000 minus 5,000. 20,000. Wait. Is there any down payment made? Down payment made is what? 10,000. Down payment will not include interest. So add the 10,000 also. How much it will be? 60,000 is the cash price. This is the cash price. So how to cross check? You can cross check. Listen. First year, what is the cash price? What is the cash price? In the 60,000, how much you paid? 10,000 you paid. What is the balance outstanding? 50,000 into 10%. How much it will be? 5,000. Okay. In the 50,000, 20,000 is settled. What is the balance? 60 minus 10, 50. In the 50, we settled 20,000. 30,000 into 10%, 3,000. In the 10,000 is settled. 20,000 into 10%, 2,000. Last year, this 10,000 would be outstanding. 10,000 into 10%, how much? 1,000 like that, you can cross verify. Now, you will ask questions, sir, why this interest is not in, how many years problem is this one? 4 years problem. Why this interest is not in 4:3:2:1 ratio? Interest, if you look at 5,000, 3,000, 2,000 and what? 1,000 is there. Why this is not in 4:3:2:1 ratio? Because installment paid is not uniform. Installment paid is a 10,000, 10,000, 10,000 each year. First year you paid a higher amount. Thereafter it is different. So interest need not be in that ratio. When the installments are paid in a different style, interest need not be in what? That 4:3:2:1 ratio. Leave out all those things. When we do a reverse working, this is how we have to work out. Take up this. So only workings are different. Ledger accounts are going to be same like the last problem. Take up this working and try the ledger accounts. You are going to try the ledger accounts in the books of purchaser as well as in the books of what? Vendor. What is the depreciation rate I have given you? 20% WDV. 20% WDV. Apply this. If vendor and purchaser name is not given, you can assume hire purchaser, HP like that, you can assume and do it. Start. Accounting in the books of hire purchaser. Accounting in the books of hire purchaser, that is which company? A Limited. For me, it is simple. What is the name of the asset purchased? Name of the asset, machinery or truck? Machinery. Who's the vendor? B Limited. Start. In the books of A Limited, machinery account data are to B Limited account. Machinery account data are to B Limited account. What is the cash price? 60,000. Here it will come as buy machinery. And when you prepare, of course, that B Limited account, buy machinery 60,000. Depreciation is which method? 20% WDV. By depreciation on this 12,000 balance 48,000. 48,000 by depreciation 9,600 balance. Like this you can continue for 4 years. 38,400 into 20%. 7,680. Like that you can continue for 1 more year. That you can do it. To bank, what is the down payment made? 10,000. Check the table. Interest for the first year is how much? 5,000. And that 25,000 is paid. Balance carried down is 30,000. 30,000 interest for the second year is 3,000. That 13,000 is paid. 20,000 interest for the third year is 2,000. 12,000 is paid. Balance 10,000 outstanding. The 10,000, what is the interest for the last year? 1,000. To bank we are paying what? 11,000 and settled. Accounting is only 2 ledgers, nothing more, nothing less. Shall we proceed? Who's the hire vendor? Who's the hire vendor? Okay, in the books of B Limited, you will maintain what? A Limited account. In the books of B Limited, maintain A Limited account. To hire sales, what is the cash price? 60,000. Everything else will be like just reverse posting. By bank down payment 10,000. First installment 25,000, 5,000 interest. To balance brought down 30,000, interest 3,000, bank collected is 13,000. By balance carried down, how much? 20,000. 20,000 interest 2,000. What is collected? 10,000 interest 1,000. What is collected? And closed. So this is answer for question number 3 or 4. Before we go for a break, one small sum we'll work out. One small problem we'll work out. Okay. To two things. One is one small problem we'll work out. Second thing I'll tell you later. Okay, small problem we have to do about interest calculation alone. Okay, it is just a mirror image. You can do it at home also, no issues. You've done for 2 or 3 years sufficient. Other things we just like write same as last problem. We can do it at home also. Now, take up this problem. This is not there in your material. Take up this problem next. Shall we? We did problem with cash price missing, interest rate missing. Okay, like that. In this problem, everything will be missing. Higher purchase price will be missing, cash price will be missing, and what? Interest rate also will not be given. Nothing would have been given, you have to work out. Installment will be given, installment only will be given. Start. Down payment 20%. Down payment 20%. Down payment 20%. Next. Installments including interest, installments including interest from 1 to 4 years. 1 to 4 years means at the end of first year, second year, third year, like that. Shall we? First year 72,000. First year 72,000. Second year 64,000. Second year 64,000. Third year 58,000. 58,000. Fourth year 50,000. That's all. Make a small change. 56,000, 48,000. Sorry. Make a small change. 56,000, 48,000. 56,000, 48,000. One more assumption let me give you. Assume cash price is paid uniformly. Cash price is paid uniformly. Cash price, the principal amount is paid what? Uniformly. So this is given with what? Interest. Down payment is 20%. There is not interest rate. Down payment is 20%. Is it possible to work out full hire purchase price? If we add up, it will only installment will come. Installment plus down payment only will give us what? Hire purchase price. Rate of interest is also not given. Which one is not given? Cash price is also not given. Think and try. This will be for 2 marks. Cash price? Cash price 40,000 equally. Cash price 1,60,000. No. One lakh 92,000 cash price. No. Not 1,92,000. Think. not 1,92,000. Think little extra, you will get the answer. 2 lakhs correct. Listen, if installment is uniform, interest will be in which ratio? 4:3:2:1 ratio. Listen, let me to assume cash price paid as X. Let me to assume cash price paid as X. Now interest will be, okay, let us take cash price plus interest will give us what? Installment. Each time cash price plus interest will give us what? Installment we are given for first year, second year, third year, fourth year. What is installment given? 72,000 in 64,000, 56,000, 48,000. Now this interest will be, let us assume cash price paid as uniformly, or it is given in the problem X. Interest will be in which order? Reverse order. Let us take it as 4y, 3y, 2y, y like that. Clear? If interest is y for fourth year, it will be what? Double the amount for third year, triple the amount for second year, and what? First year it will be what? 4 times. You take any 2 years and solve the equation. You can take first and second, or second and third, or third and fourth, and solve the equation. How to solve the equation? Third year and fourth year, let me to take, that is easy. X minus X, 0. 2y minus y. Y is equal to how much? 56 minus 48, how much? 8,000. 56 minus 48 will become what? 8,000. Or even you can eliminate first and second also. For example, X minus X. If you take first and second also, X minus X, it will become 0. 4y minus 3y, y. 72,000 minus 64,000, that will also give what? Same answer 8,000. Same answer 8,000. Listen, let me to fill up here itself. If y is 8,000, if y is 8,000, X will be how much? 40,000. X will be 40,000. 2y is 16,000. 56,000 minus 16,000, how much you will get? 40,000. Then 3y would be 24,000. From 64,000 minus 24,000, how much it would be? 40,000. This one 72. 4y will be 32,000. 32,000, how much it would be? 40,000. So cash price paid, if you look at 40 plus 40 plus 40 plus 40 plus 40, only 4 times, how much? 1,60,000. Down payment is how much? 20% on not 1,60,000. 20% on cash price. If down payment is 20%, balance will be what? If down payment 20%, if you paid 20% immediately, what will be the balance? 80%. So 20 by 80 into 1,60,000, how much it would be? 40,000. If 80 is 1,60,000, what is 20? 40,000. If you add, you will get cash price. What is the cash price? Cash price is 2 lakhs. You can cross check also. What is the cash price? 2 lakhs into 20%. 2 lakhs into 20%, how much it would be? 40,000. Right? So this kind of a problem also can be tested for a short answer question like 2 marks, 3 marks like that. Because there is nothing to think in this. Only one logical order that you have to assume is when cash price paid is uniform, interest will be in which order? Reverse order. 4:3:2:1. 5:4:3:2:1 like that we'll take. Yeah, one more thing. This is the first point. This is one of the most important problem for exam for short answer question. Of course, there is a big difference. I always tell between 39 and 40 marks. Okay, and 59 and 60 marks. Okay, you get exemption when you score 60. When you pass the exam, when you get 40. Move on. Okay, that's the first point. This is most important. Second point is how many problems you have done so far in that material. How many problems you have done? How many questions? 4 questions. Those 4 questions will not be asked in the exam. In the hire purchase, till question number 4, I guarantee you it will not be tested in the exam. Okay, what is important for your exam is question number 5, 6, 7, 8. Because without default and repossession, they will not ask a question. You are not able to pay the money,
That asset is what? Taken over by the other party. Actually, what we are doing in the first four problems? Nothing. We prepare asset account, charge depreciation and close. Here, interest payment, routine process and close. For this, you need not be a professional. Okay. So this one also, just a reverse image which we just write and complete. This will not be tested in exam, but this question, yes, this calculation of interest, hire purchase, this can be tested. Okay. After the break, we'll go for which one? When you are not able to pay the money, when the hire purchaser is not able to pay the money, what will happen? The asset will be taken back. How to do account?